This video will be about my investment strategy. My investment strategy is based on consistent weight of evidence, rule-based decision making, and a top-down approach by utilizing analytics, data-driven insights, and technical analysis. I focus on maximizing the profits of success in my trades and investments. Furthermore, risk management plays a crucial role in my approach, allowing me to navigate various time frames, including short, medium, and long term. So let's delve into the details of how I invest and I trade with numbers, mathematics, and probabilities. Let's go over each of these statements. First of all, my investment strategy. I believe every investor, long-term, intermediate-term, swing trader, day trader should have a strategy. We all may have different strategies, but we should all have a strategy. Some people believe in fundamentals. Some people believe in technical analysis. Some people believe in data analysis. Whatever your strategy is, it's important to have one. It's important also to be consistent. Do not change day to day, week to week, minute to minute. This consistency we have been doing for at least 15 years. Weight of evidence. I have over 100 indicators and I weigh the evidence of those indicators. I'm a rule-based decision making. I have rules. I will tell you many rules that I have, from top down to proprietary indicators to RSIs to MACD. I have a top-down approach. I figure out what's going on with the overall market, break it down into the sectors, and then into individual securities. I utilize analytics. I study previous information, I study current information, and I use data-driven insights to tell me which direction we're going. I am mostly technical analysis, where I believe charts and the history will tell me where the future is going. I use probability. I will have a probability of succeeding on each of the indicators, combining each of the indicators together for my trades and investments. Furthermore, I use risk management, stop losses. I might be 80%, 90% right, or 70% right in my system or your system. You need to have a certain risk management where you do not lose all the profits or lose the capital. It plays a crucial role in any approach, and especially my approach. I use different time frames. You can be a short-term trader, a medium-term trader, or a long-term trader with this system. It makes no difference. Let's continue further. I just want to harp on what I get this information and how I get this information. I call myself analytics, data-driven insights, and technical analysis. I want to increase the probability of achieving my goals by combining all these indicators together. I follow the disciplined approach. I am consistent. Consistency means I do not change from day to day or minute to minute. I've had this system for many years now. Have I nicked and tucked a lot of the information? Absolutely. Also, some indicators might work very well certain years and other years not work very well. But still, the approach is very consistent. I am not a fundamentalist one day and then a technical analysis one day. I am not a day trader one day, then followed by a long-term 3-year and hold and pray type of person. I am consistent with my approach and consistent with my strategy. The strategy of building a system is so important. I am not taking guesses, and these are my rules. This is my process. And with my process, sure, through the years, I might change a few things, but it has remained relatively the same since I started 15 years ago. My plan, I want to have a probability of succeeding. I want to have a written down strategy. And then I want to have following moves, what I will do. And this all comes from building a system. weight of evidence. I'm considering multiple sources of evidence. I am not considering just MACD or RSI or phases of a stock. I am weighing the evidence and I am deciding based on not one indicator, but many indicators, various indicators, market trends, and economic data. I use a comprehensive view of the market. This is so important where many people may just use 3 or 4 indicators and it might work good for 6 months and then not work good. There are many years that in 2022, one indicator worked very well. And then for 7 months, that indicator did not work very well. So when I'm considering multiple sources of evidence, it gives me a probability. I am a rule-based strategies. Individuals typically take their investment decision based on effect or emotion. A rule-based system provides a disciplined approach to trading. Importantly, it removes the urge to buy a stock based on excitement about the possibility upside, to sell a stock, or reaction to a negative information. News might come out on TV. Analysts might say different things. This does not change my system just because somebody on TV said it's a buy or a sell, or this person said it was good or bad. My rules tell me which direction I am going. A rule-based system is a system that applies human made rules to store, sort, and manipulate data. To work, rule-based systems require a set of facts or sources of data and a set of rules for manipulating that data. Rule-based investing is a list of strict guidelines which is based on a series of simple if-then rules. If this happens, then I will do this. If this happens, then I will do this. And if 75 ifs say this is a bull market, a bullish market, it's probably going to be a bull market. If 75, 80% of the ifs say it's going to be a bearish market, then it's a bearish market. We must have the right rules, at least what I think is the right rules for myself. There must be no emotion. When I trade, when I invest, I have no emotion. I do not get emotionally invested in a stock, a direction. I no longer want to guess if the stock is going up, down, or left. I want my rule-based system strategy to tell me if this is going to happen. I'm making decisions based on probability. If these indicators tell me there's a probability that previous years has gone up 90%, there's a very good chance that I will make money. In a rule-based strategy, the first step involves defining a set of rules. You must define your set of rules. These rules are typically in the form of if-then statements, where specific conditions trigger that certain action or decision. Each rule consists of 2 parts. Antecedent. If. This is a condition or set of conditions that must be met for the rule to be applied. Consequence. Then. This is an action or decision that should be taken when the condition is in the antecedent are satisfied. Rule base. All the defined rules are collectively form the rule base. The rule base serves as the knowledge of the respiratory for the rule base system. So you understand the way I'm building things out here. I'm telling you, my information comes from analytics. It comes from data. It comes from technical analysis. I will have a probability of succeeding. I am following a disciplined approach. I have a set of rules that you make a decision-making process. I am considering multiple sources of evidence, and I am rule-based. My rules are predefined to make choices. I believe for myself, I have the right rules. I have if-then statements. But let's continue further. We are a top-down analysis strategy. We try to figure out what's going on with the overall market. If you figure out what is the direction of the overall market, it will be very easy to decide on what's coming next. Then we break it down into the most positive sectors, and then we break it down into individual securities. This is a 3-part process. Again, we are top-down analysis. A top-down approach to investing is a strategy that involves making investment decisions by the first analyzing and evaluating macroeconomic factors, then moving down to the industry level considerations, and finally selecting individual securities. This approach emphasizes starting with a broad perspective on the economy and financial markets before narrowing down to a specific investment choice. Three-part process: overall market, bullish or bearish. Which sectors are in this overall market movement? Is it a bullish or bearish? And then we break it down into the top individual securities. We could take hours on going over this, but let's just go over a little bit. By utilizing analytics, data-driven insights, and technical analysis, I focus on maximizing the probability of success in my trades and investments. I am very much a data type of guy. I like studying the history to tell me which direction this market's going up. I'm utilizing analytics. If this happens, then this happens. If this happens, then this happens. I am not a fundamentalist. I am not going over PE ratios and listening to conference calls. I am looking at the direction of the stock. I want to have a probability in all my trades, even if it's long-term, intermediate term, short-term. Tell me the probability that I will succeed, and then I will make a decision if this probability is good for me. Risk management. In financial terminology, risk management is the process of identifying and assessing the risk and then developing strategy to manage and minimize the same while maximizing the returns. Risk is therefore essential to the stock markets or investing because without risk, there could be no gains. Anyone tells you they are flawless, they have a system for you, for sure you're going to make money, buy my system, look at how I invest, I am never wrong, pay me the money. You need to develop your own system. You also need to know you will be wrong. I will be wrong a percentage of the time. I have figured out the probabilities that I have been wrong, but on every video we have, protect your capital by all means, disclaimer. Because if you do not protect your capital, you do not have risk management. Even in positioning sizing can be risk management. You need identifying and assessing the risk. As also, this can be talked about for hours. Analytics, data-driven, and technical analysis. So can risk management be talked about for hours, and how to use position sizing, stop losses, how to use when to get in and out of a stock. This is also risk management. Also, time frame. We talked a lot that we look at it in three forms: short term, intermediate term, and long term. Let's start with the long term. Long term, when we say we are long-term investors, in our videos, we try to give, especially in the United States, a tax benefit of 12 months. So when we talk about long term, we want to try to hold a position for at least 1 year. Now, thus saying that, it could be 9 months, it could be 10 months. If the stock or the market is falling, we will quickly change our position long term, even if we do not get our tax-friendly benefits. But when we say long-term, we mean 1 year. When we give you long-term bullish, long-term bearish, we are looking at a 1 year possibility that this will happen. Not that we wouldn't change our probability, we wouldn't change our decision, but at the end of the day, long year is 1 year for us. Intermediate term runs from 3 to 6 months. When we say intermediate term, bullish or bearish, we are looking to 3 to 6 months. Short term, we talk about 3 to 14 days. We are not day traders. We are more swing traders on our short-term movements. Usually, the most sweetest spot and the most money you will make is in the intermediate term, 3 to 6 months. If you time a move of the market moving 3 to 6 months, that could easily be the sweetest spot and the most money. Now, the short term is, for us, a little times more safer because a lot of times in 3, 6, 7 days, we're back in cash, but still. But even for long-term investors who want to hold on for 1 year, this system, your system can work. Let's review. My investment strategy is based on consistent weight of evidence, rule-based decision-making, and a top-down approach. By utilizing analytics, data-driven insights, and technical analysis, I focus on maximizing the probability the high probability of success in my trades and investments. Furthermore, risk management plays a crucial role in my approach, allowing me to navigate various time frames, including short-term, medium-term, intermediate-term, and long-term. You know the catchphrase we say in our videos: study it, analyze it, adapt it. Peace.